Hey traders, we're back. All right, the Trade Father here along with Koki. And what we're going to talk about right now are the red and blue boxes. Now you see the S on the red box means supply, and the D on the blue box means demand. Now the number next to it, so I'm pointing right now at the yen. So on the 15, it says supply is 15. That means you are 15 pips away from supply. And you see how demand says 14. All right, so you're 14 pips away from demand.
So does that mean that I'm in the middle of the trade?
No, that means what it means is the price is stuck between supply and demand, and it's actually moving sideways. So if you see the red box, is that the algo is looking for something that gives you what? A range of imbalance. So right now I'm pointing at the CAD. Now you see how the CAD is a score of 20 and demand has a score of 10. Okay, so that means you have an opportunity to make 10 pips to the upside, and you have volatility in the market right now. Because as you see, this is actually telling you the angle of the teeter-totter effect. Okay, so on the CAD only though. All right, so the CAD, you can see that we can make 10 going to the downside, and supply is up. All right, so we want to be able to see how far we can take. So right now, if we looked at it, it says supply is 20 pips away. Okay, that 20 means 20 pips. And we have the opportunity to take the CAD long, and it has 20 pips to make before the next supply level.
Now, is that on all the CAD pairs?
That is overall on all the CAD pairs. Okay, this is calculating an average, and it's basing the supply level on the 30-minute, the 3-hour, and the daily supply level, and it's averaging that number out to tell you the distance on this time frame. Now, again, we're day traders, all right? So we're also swing traders, but most of these numbers are set up for a day trade for you to take. Now, you don't want to trade the yen right now because it's balanced. You see how the 15 and the 14? That means the price is trapped. But if you look over here across, you see how the 10 and the 20 are more imbalanced than, say, the 16 and the 15 on the Swiss. The Swiss is also stuck, okay? But it also has a lower score on the strength.
So does that mean that I'd have to be watching the chart and making sure that I'm not in those pairs, or just be aware of it?
Well, you shouldn't be. If you want your highest probability trade, you should not be in the yen or the Swiss right now. Okay, if you want a higher probability trade, you want some number that's really imbalanced. Like right now, if you look at the pound or the New Zealand, look at that New Zealand. You see how it's a 15 and a 42? All right, even though it's not as weak as the pound, it has a much more advantageous way of making money. Why? Because it's going down. It has 42. Okay, so 15 to 42. So it has 42 pips to make to the downside. Now, if you notice the circle below, and you have to watch, that circle below is your average daily range and how much money you can make. Now, if you don't understand the circle, then you have to watch the video on the average daily range.
Okay, cool. So would that be next?
That'll be next.
All right.